A lot of what we're seeing at the moment is decision making being made by those who already have a house. So they're trying to dictate to everyone else how they should live, which may not necessarily meet their needs. But the implication is the whole construction sector has to start chasing the same pool of labour, and we've not grown the pool of labour in line with the amount of work that's been out there, and that's why we've seen this labour cost inflation. So what you find is the councils spend millions every year in defending court cases. If they invested a fraction of that in just a couple more engineers and planners to resolve applications up front on time, everyone would benefit.
So we're here with Max Shiffman, CEO of Intrapac, direct past national president of the UDIA. Good to see you, my friend. How are you?
Great to be here. Thanks, Mike.
Well, you know, we talk a lot about property, you and I, and I've been discussing kind of having you on to come and talk to us and filming one of our conversations about what's going on in the market. We don't always exactly agree on the outlook, but one thing we definitely agree on is that we need more houses, and the houses got to be of good quality, and we need the government to lift their game and do more. And so on your, from a first kind of point of view, you know, what's your take on what's going on right now?
Well, we're experiencing some, I would say, unique issues really across the board. You never say there's one property market, firstly. You know, every different location, every different typology is facing different challenges, but the collective is the whole industry is not producing enough of anything. That's really the summary of what we're seeing at the moment. And it's a combination of things. We've seen the last couple of years really accelerate cost across the board, and it's a combination of material costs. We all know the reasons for that through the pandemic, and then labour costs subsequently, and that's all translated directly into the feasibility of really a lot of different types of housing. But then you couple that with a planning system that has frankly become constipated, and you know, it's a funny way of looking at it, but it doesn't matter which state or which local council area, there's this inability to actually get to the point where you can say yes and start building a house. There's always a reason to say not. And it's proving itself in the data now that what's getting approved is not getting built on the one hand, and then things that would be more feasible and viable today are not getting approved because of all those other dynamics. So the collective is we're way behind where we need to be. I'm not seeing anything that's going to change that very quickly. And you know, the conversations with the government are all about we have these targets, but they're not really doing anything to make them reality.
Yeah, and I feel like, you know, obviously with property development, whatever the slowest part of the project is the speed of the project. And certainly from developers I speak to in the apartment sector, and also, you know, the large guys in the master plan community space like yourself, you know, the thing I'm hearing more so than, you know, supply side challenges is a lot more to do with, you know, the most fixable problems seem to be related to the government at the moment.
Yeah, correct. And it's not just the government as in who's in charge. It's actually a lot of the government instrumentalities and authorities that you deal with. So the way the planning system works, and it's an amalgam of things, but it's also very different depending on whether you're building an apartment building versus building a couple of townhouses in an established suburb versus doing something at scale like I do. Again, the outcome is the same, but the issues are different. And so what we're really experiencing in particularly the Greenfield or the master planned middle ring community space is we're having to deal with so many external authorities. And the way the system works, you can't get started unless you've ticked every single box in the lead up to actually being able to put a shovel on the ground. And so you're dealing with water authorities and power authorities, transport authorities, the council. Within the council, you'll have a myriad of different groups that you have to convince that what you're doing is okay. And it takes any one of them to not play ball at the time, and the entire project is pushed back. And then worse, a lot of these things aren't actually things you can do in parallel. You sort of need one approval to get onto the next one. Like a little example is I need to have a finalised subdivision plan, engineering plan before I can then go get a landscaping plan approved. But that landscape plan has to be approved before I can start construction, for example.
And with that, so is that more related to kind of the realities of doing business as far as not wanting to have sunk cost if one part of the process falls over? Or is that a structural kind of processing at a government level in terms of requiring, like mandating those steps be completed before the next part of the value chain?
A lot of it is just about the vibe, how the authority feels things should be done. And so they'll have certain expectations. And as you can imagine, a lot of things are interrelated. So if I'm doing all the stormwater design for a particular stage, that then influences so many other things around the topography of the site and the retaining that you need and how much water volume you need to keep on site versus let out. So everything is consequential. And so you can do all the work at the same time and submit it, but the reality is if one thing changes, the flow and effects of all those changes are pretty significant. So it doesn't make sense to design everything once because people always have to find a flaw, otherwise they don't think they've done their job.
Yep, I know that feeling in other areas. And so obviously, you know, it's been really well documented in Queensland, for example, that there are issues in relation to the supply of labour. And, you know, there's a lot of kind of government projects going on there. When I was over in Perth, you know, a month or so ago, it reminded me, talking to the developers there, it reminded me a lot of the conversations that I have with developers in Queensland. And I think those two markets in particular have the labour shortages. How do you find working in Victoria in relation to the labour side relative to other states where you guys are operating?
So the issues are similar, but they're definitely more acute in the apartment space because of the style of development, style of construction that's involved. So, you know, typically very heavily unionised. The influence of the unions, particularly in Queensland, is very well known. There's been a lot of discussion about the CFMEU more broadly. So you're at a point now where jurisdictions like Queensland and WA really have no builders that can even quote on new projects. So I'm hearing stories of developers having to basically become their own builders. Not because they want to be builders and it's highly profitable, far from it. It's just because it's the only way they have certainty they can get a project off the ground. I hear more and more stories, particularly in Queensland again, where developers have projects that they've pre-sold, they think are feasible, but the builders won't even quote on their projects. So the projects are stalling from that basis. I know in WA there are so few builders that can do, you know, high-rise scale that people aren't even bothering getting approvals for the most part because they know that they're not going to get built. In Victoria, that's less of an issue directly. There is still a workforce, but the things that we've faced here, particularly again in that apartment space, are really the connectivity between the union EBAs and the rates that they're paid in these massive infrastructure projects, and the country has been led by Victoria in the amount of investment in government infrastructure projects. So that has taken a lot of the pool of trades and put them into those projects. But they've also then become part of these broader EBAs, which have significantly inflated labour costs.
So just to clarify, so what you're saying is that because the government contracts are kind of have a set EBA in terms of the price of the labour and things like that, and that's effectively dragging up the price of the private sector resi projects.
That's right. The private sector's had to compete on wages to maintain people, and it's not just to maintain them from a pay perspective. There's also conditions that come with it, etc. And so just earlier this year, the Victorian CFMEU won a 20% increase in wage rates over 4 years. In New South Wales, it was 21. I think it's in the low 20s as well in Queensland. So that sort of becomes baked into the entire labour force.
And so with the EBA, sorry, excuse my ignorance, but so with that, so if that's kind of based on so that's across the entire sector, and so it's kind of set, if the majority of the work's from commercial, it's kind of negotiated with the government, and then is that then applied through to the private guys?
Effectively, yes, because you have to then compete. So let's use a little example. If you had an electrician working in a private domestic job and they were getting $80 an hour and they'll pay them $150 an hour in a unionised infrastructure project, guess what? They're going to go work for the government. That's a rational, reasonable decision. I don't begrudge them for doing it. But the implication is the whole construction sector has to start chasing the same pool of labour, and we've not grown the pool of labour in line with the amount of work that's been out there, and that's why we've seen this labour cost inflation, and it impacts everything.
Yeah, interesting. And so what's going on in the Greenfield market? If you're saying it's kind of more constant, obviously I mostly spend most of my time talking to apartment developers, but you know, we talk a lot. But so it'd be good to hear kind of like, what are some of the constraints that you're seeing, and what do you think if there are a couple of things that could be done, what would they be?
So the Greenfield space is, I suppose, being held back by government policy that's trying to really rein them in. I think that's really the starting point. So in Victoria, you have a policy which is a 70% infill, 30% growth area policy, i.e. they want 70% of new housing to be in established areas and 30% in greenfields. And that's not really been how we've actually grown for a very long time, particularly in Melbourne, but also indeed around the rest of the country. And you can understand the sort of reasoning why that would be an attractive thing. Yes, we all want to be closer to stuff that exists, better amenities, better infrastructure. I don't have any issue with that at all. I'm actually very much in favour of densification in the right way. But there are some fundamental economics that make that really difficult to achieve at scale. And so on the one hand, there's this desire to see more infill housing, particularly in sort of middle ring apartments around train stations, that sort of thing. Again, all makes sense other than the economics. And then as a result, there's been a deprioritisation of unlocking greenfield areas. So we've seen precinct structure plans. That's what's sort of in Victoria the precursor to unlocking an area of greenfield land.
Right.
Those have been held back by the Victorian Planning Authority, which is the authority responsible for approving them. They've only approved one in the last 4 years.
And so with that, is it mostly forest converting into greenfield projects, or is it farmland going to greenfield?
It's mostly farmland. A lot of it's not particularly productive, but this is land that's already within the urban growth zone. So we're not talking about demolishing pristine forests or anything like that. These areas that are already identified for growth at some point. It's just that there's this step in the way, which is you've got to have a structure plan approved by the government, and they're just not doing that anymore. So that the supply of new greenfield land is drying up very quickly. The other issue in the greenfields is often they're missing enabling infrastructure to actually unlock them. So that could be a major road intersection, that could be sewer or water, public transport, things like that.
How much, and you might not know this off the top of your head, but how many lots are available within the existing kind of growth area in Victoria?
Right. So the projections look at it from a years of supply perspective.
Right.
So collectively in the urban growth boundary, there's meant to be between 15 and 20 years supply.
Okay.
Of total. But the approved supply is a couple of years.
Right.
And there's a gap between what's in the zone to be developed versus how much of it has actually gone through the various steps along the way to make it developable.
Right. And so there's kind of 1 to 2 years supply. And so that stuff is going ahead, or it's not?
Well, a lot of that stuff has been going ahead.
Yeah.
Most of it's approved and held by developers. It has been certainly tough for the last 12 months to be selling land as well. So there is a demand issue at the moment. It's not an underlying demand issue in the sense that we know population growth is there. We know there is a desire from people to buy a detached house and land or a compact townhouse in these new areas because of the price point.
Yeah.
But they are being constrained now by the broader macro issues around interest rates and finance. If we talk about Victoria, particularly for a sec, we are doing worse than the rest of the country in terms of unemployment. It's still relatively low, but we're actually leading the nation in terms of unemployment in a negative way.
Yeah.
So there's a bit of economic uncertainty that's creeping in. We've also got a dynamic here in Victoria where investors are starting to leave the marketplace because of the tax regime that's currently in place, a lot more land tax. It's becoming more punishing to be a private landlord or a rental provider, as they call you now.
Yeah.
And so what you're seeing is a lot of investors starting to exit the marketplace. And that's creating a challenge as well, because investors sometimes need to get out because it's not their primary property. So they'll sell at a price that's reasonable. That might not be the maximum sort of market price, but there's, because of those cost inflation issues that we've experienced, a bit of a delta growing between buying an established house in the greenfields and building a new one. So again, rationally, people can go and buy a house that's 2 or 3 years old that's basically the same as what they would build now, but they're probably saving $80,000 or $90,000 for the short term.
Yeah, I mean, we had a look. We haven't released the data yet, but we've been looking at the kind of difference between the median house price of an off-the-plan apartment relative to the median completed stock, and it's unsurprisingly large. And we'll kind of present that data in the next kind of month or so. But do you think, does that same kind of dynamic apply in the house and land sector?
Yeah, absolutely, it does. Buying anything off the plan is a risk, and so if you can buy something that is available and substantially cheaper than what you'd otherwise buy, it may not be exactly what you might have asked for, but close enough. So it becomes a rational economic decision to go down that path. And that dynamic you're talking about, I suspect it'll be much larger, the delta between an established apartment versus a new off-the-plan apartment. the gap between a new
you mean relative to house and land?
Relative to house and land, yeah. So house and land, I think there is currently a delta, but it's probably 10%, whereas in apartments, it's going to be substantially higher, I assure you.
Yeah, I think you might be right. Are there any states in Australia right now that are kind of, who do you think is doing a good job out there from a kind of government point of view? Because I know, it is obviously frustrating for all of us when we see the opportunity for these houses to get built. We've got a rising kind of issue with homelessness, and many of us are tearing our hair out and just being like, we fucking get on with it and get the job done, And I think there are people that are inherently kind of blocking this stuff happening, but there's also been people from the government that I've spoken to that are kind of aware of the issue and do seem to be acting in good faith and trying to get this resolved, but they face some of the same blockers that we probably do. So who do you think is doing a good job out there and really trying to get shit going?
Well, it's a really tough question because we're not doing great anywhere, and that's an honest response. Victoria, funnily enough, is still leading the nation in terms of approvals, albeit coming off a really, really high base. So,
low base.
Well, it's actually of a high base, as in the peak was very, very high, but it's come off a long way. But somehow it's still just leading the nation. But that's because your only point of comparison is with New South Wales, which is an absolute basket case in so many ways.
Is that? Do you think the New South Wales issue is more of a government thing, or is it related to the typology of the land and stuff, where it's like more hills and whatnot? Yeah,
well, see, let's distinguish Sydney from the rest of New South Wales first. Yeah, Sydney's got some pretty fundamental physical constraints, not in every direction, but in a lot of directions. So it's just not going to see the level of Greenfield unlocked as you can have, say, in Victoria or Southeast Queensland. So that is a physical thing. But their planning system, their contribution system is also a lot of the issue around the cost. So it just ends up being a much more substantially costly exercise to deliver a new dwelling.
Are you guys, as Intrapac in New South Wales?
We're not in Sydney, but we're very actively invested in northern New South Wales.
Right.
So we've got a series of projects between Ballina and the Queensland border.
Oh, yeah.
We're probably one of the most prolific developers in that region, actually.
Right.
The issues you face there are a little bit different. You've got some councils that ostensibly want to see housing development, but they're just under-resourced. They haven't got the capacity to deliver stuff quickly enough, and that's really holding us back.
Yeah, is it a chicken or the egg type problem in terms of like more housing equals more revenue for the local council, which can help to,
Yeah, it is, and it's all,
resources.
Interestingly, if you look at how some of these councils behave, they aren't able to meet statutory timeframes, and they're typically not super negotiable and reasonable about getting to a DA. So most developers will put in an application, and then as soon as the statutory clock is up, they just go straight to the Land Environment Court. And so what you find is the council spend millions every year in defending court cases. If they invested a fraction of that in just a couple more engineers and planners to resolve applications up front on time, everyone would benefit. But there's this sort of view that they would rather take on the fight and then it's gloves off and they throw the kitchen sink at you rather than just resolve things quickly. I mean, I've got DAs that are 3 or 4 years old that can't get approved. We try not to go to court. We don't always not go to court, but our MO is to try and avoid having to escalate everything. And you get there in the end, but it's a very costly experience either way.
Yeah, and for both sides, right? And
yeah, no one wins. The consumers have to pay a lot more at the end, and then they say, why is there no affordable housing?
Yeah, I hear you. And so you have obviously been a big proponent of the golf course kind of, being leveraged to address some of the housing supply issues. Do you want to talk a bit about that, and why do you see that as kind of a key opportunity?
Sure. So when you break down the various of sub-markets where you can do scale, so you've got either pure greenfield, new suburb development. You've got on the other end of it the scale apartment building, which is happening less and less around the country. And then you've got this middle zone, which is your middle ring development at scale. And the middle ring is really important because it's probably the most underutilised area in terms of the ratio between great amenities, reasonable land prices, and the end price point you can deliver a product at.
Yeah.
So I actually think it's the sweet spot, particularly if you're going to more of a mid-density terrace style housing product.
Sorry, and so what kind of price point are you talking about for those types of townhouses for, like, say, like a 2 or 3 bedder, 2 bath?
Yeah, so you're probably looking at a 2-bedroom townhouse under 600,000, 3-bedroom probably in the high 7s to 8s. Again, it will really depend on the exact location, marketplace, and some of these things will vary as you get through detailed costings, and there might be things you don't expect. But that's the sort of range you can expect, which is going to give you more space for your dollar than a traditional apartment for the same money.
Yeah.
You'll have a bit of open space. It won't be the sort of traditional quarter-acre backyard that everyone, well, not everyone anymore, but people used to aspire to. But you'll have space. You typically have it combined with great public realm in terms of more open space on average, with parks and gardens and things around you.
And what kind of square meterage do you think that would be on from like a land size with the townhouse?
Look, they can be pretty compact. So
200?
Possibly even less.
Yeah.
Yeah. It really depends on a lot of other things, the orientation, what other things are on offer, and what the sort of size of the actual dwelling is. But it can range. It could be 100, could be less in some cases. Right. We haven't done a lot of that product, but you've got areas in South Australia, for example, where they've really innovated on compact products, and some of that's on 70 or 80 square metres. So, and that's still giving people really good internal amenity and is being built for a fraction of the cost of an equivalent apartment for the same density. So,
and are we talking about kind of 15Ks from the CBD, 20Ks from CBD?
Yeah,
that.
Exactly. That sort of 10 to 20K radius. But there are only so many sites of scale that can do that.
Yeah.
And so, we've identified golf courses as one of the best opportunities. Now, I'm not talking about rezoning public golf courses.
My business partner, George, would be having your guts for garters, mate. He loves golf. So, no, we often laugh about that. And I was like, he's not kind of going after these ones. And
no. So, look, there's a very big world of difference between a publicly owned golf club and one that I privately owned. Private golf courses have traditionally moved over time. You look at Eastern Golf Club, for example, moved out to Yering. That became the Tullamore project that Mirvac built.
Yeah.
There have been countless examples of that happening over time as, that sort of urban encroachment comes up. And often it's a combination of the encroachment, but it's also that the economics of golf aren't great for your sort of middle tier of golf courses. So if you're, one of the very, very high-end golf courses, you've got a waiting list longer than, anything, longer than the first tee. And you can charge whatever you want to members within reason. Yeah. Those courses generally do very, very well financially and can survive into the long term. But the tier below, it's a lot more competitive. You got, I'll call them real people who want to play golf. That they obviously want to play a lot, so they're happy to pay a membership, but there are limits.
Yeah.
And so some courses have found over time that the cost of keeping up a great course or being able to reinvest with capital into the site to keep it modern hasn't kept up with what members are able to pay, and so it's certainly been a bit of a slow death over time. And so
just consolidation happens, right? And
exactly. So sometimes it's consolidation or mergers. Sometimes courses will simply pick up and move a bit further out. So there's sort of an arbitrage there between the underlying land value, and there are some places where that makes sense. And this is not going to, by any stretch, solve the entire housing problem, but I talk about scale a lot as being critical to affordability. You can't get affordable housing by doing dual occupancies in middle ring suburbs.
I was going to ask you before
expensive.
About that. Is like, how much of it is about kind of like the volume that you can get through?
A huge amount.
Yeah,
huge amount is the efficiency in the land, the efficiency in the layout that you can deliver that you can only do when you've got a reasonably large site.
Yeah.
So it's
and what's a large site?
It's got to be in the tens of hectares. So,
right.
A golf course will be from 45 to 75 hectares. It's a pretty good piece of dirt that you can work with.
And how many properties, how many people get homes from that?
Well, I've talked a lot about the Keysborough Golf Club. It's one we've been trying to get rezoned for 9 years. That could be 1,400 homes.
Yeah, wow.
3,000 or 4,000 people, depending on the exact makeup, in an area that's well serviced by transport, by schools, by shops. A couple of minutes from the beach in Mordialloc, you've got Eastlink there. It's got everything you need. It costs government nothing to actually unlock it, but it happens to not be in the urban growth boundary.
Right.
And so that's been a policy that's prevented us from doing anything there, even though the council's been supportive and, everyone can see the logic. But you have one policy despite all the positives that you bring that's against you, and that's enough to not progress the project in any meaningful way.
And so who's making the call on that?
That's a state government issue.
Right.
Only the state government can decide it. So in Victoria, the urban growth boundary was brought in back in 2002 under the Melbourne 2030 plan, which was trying to, reduce the growth rate in sort of new suburbs and new urban areas. And it was meant to be not a permanent boundary that was unchangeable. It was meant to be something that you reviewed based on need, but it was meant to be more of a guide to where you'd like to see development than an absolute rule. And then somewhere along the way, it turned into, no, this is the perfect boundary. There's no issues with it. It shall never change. And of course, that's just not reality. And it doesn't take into account the specific circumstances of individual sites, or, you know, at a time like this where governments are hamstrung in the ability to spend a lot of money on new infrastructure in new areas. They certainly can't build every home themselves. Something's got to give, right? And there are pockets around Melbourne where there are logical areas you could expand into now that do no harm to any sort of ecology or anything like that, but actually unlock meaningful housing supply that's much more affordable.
Well, it's been awesome chatting. Any kind of final thoughts, or, you know, for people that are listening, what can they do to kind of help push the you know, ball up the field in terms of getting more housing for people that need it?
A lot of what we're seeing at the moment is decision making being made by those who already have a house. You know, so they're trying to dictate to everyone else how they should live, which may not necessarily meet their needs. So I think the government needs to hear from you, from those that are being impacted by this, around what you actually want, what's important to you, what you can actually afford, because they need to calibrate the housing that they unlock and facilitate based on what the market needs and what it can afford. And anything that doesn't consider those two things is going to be hiding to nothing. Well,
there was an awesome conversation. And one final thing, where can people kind of stay up to date? I know you're a bit of a big dog on LinkedIn these days, mate. So
not as big as you. I'm trying to catch up. But yeah, you can definitely follow me on LinkedIn and see all my ranting at the moment. I guess I'm just trying to bring some reality to the conversation. So many of these discussions around planning and housing are sort of very ideological or not based in reality. And I'm just trying to shed a bit of a light on, well, you know, you might have a policy, but these are sorts of things you might need to actually make it happen, which are often also unpalatable to other parts of government. And so, yeah, I'm talking about that a lot. I'm trying to build that following. I know people are listening and reading it, which is interesting in all sectors. So I'm pleased with the reach I'm getting. There's always room to grow more.
Yeah, one of the things I think you're doing a good job of with that is, in particular, like coming up with actual suggestions, because I think like where kind of people get disengaged is where we're just kind of like, if the industry is kind of throwing rocks at the government and really not providing, say, hey, this is the thing that you can do. And I think you do a really good job of suggesting practical ways that they can actually do something. So rather than, you know, criticizing, it's helping them co-create solutions to these problems.
Thank you, Mike. And that's really something that I've heavily focused on, because it's easy to complain and not have a solution. But I've actually got genuine solutions that, frankly, I think are quite easily enabled just with the right will. And the gap has been the will thus far. So I'm hopeful that, you know, with enough people talking about it and talking about the solutions, we can start to make a difference and get more houses for Australians.
And on that note, thank you very much, and cheers for chopping by.
Thanks for having me.